break it all down. What do you think the highlights are here?
That's correct. Twitter did finally post some really solid financial results, but investors really might be overreacting to what really truly are mild progress. Now, we did see revenue tick up for the first time in a long time, but it was really only 2% growth. We also saw them reach GAAP profitability for the first time, but it's unclear if that's sustainable since that was mostly due to severe cost cutting over the past few years. Now, most alarming is the fact that monthly active users failed to grow and actually declined in the United States. And even though daily active users show double-digit growth, the question is how much more value can you continue to extract from the same daily active user base? And at a certain point, Twitter will hit a ceiling. So while this is strong results for this quarter, the long-term sustainability of the company is still up in the air.
So, Corey, if more users aren't going to come, can they squeeze more out of the existing users that they have?
Well, that's the question. And what we've seen actually is a decline. If you look at the change in the year-over-year change in revenue per subscriber, it actually declined over the fourth quarter in 2016. That's exactly the wrong direction. You want inclines, not declines, and they've got declines. They've got advertisers and marketers apparently paying worse. So now the $222, compare that on a year-over-year basis to 226. We might even have a graphic that shows that. But either way, the numbers go in the wrong direction there. It's only one, but and that's advertising revenue, that's sequential growth. But really what we want to see is a year-over-year change, and the year-over-year change is worse for them. They've really got to convince advertisers to pay a lot more for those advertisements. And part of the problem is, as the mix goes more international, the revenue per subscriber goes down. So they might be able to raise rates in the U.S., but as the mix shifts to increasingly, and indeed they lost users in the U.S., as the mix shifts to more international, and over 79% of the users are international, you're going to see less revenue per user because the international ads just aren't worth as much.
We do have a chart here that shows the profit, and it is G#VTV5950. Selena, how are investors going to view this, given, the lack of progress around users, but the obvious progress when it comes to profit?
We're really seeing investors overreact to these numbers right now. They're very excited to see Twitter jump above and beyond that low bar, which really was to stop shrinking. But Corey brought up a great point, which was this growth in international users. I just spoke to an analyst that said something really interesting, which was if you're betting on Twitter, you're actually betting on Asia and most specifically Japanese growth. Japan saw some of the greatest growth, double-digit growth, while U.S. growth was actually declining. And that is alarming given what Corey said earlier, which is that you get more value per user from the United States. That being said, investors are really excited about some of the incremental product changes that Twitter has been making over the past several quarters, which are really just now finally bearing fruit. And some of those changes include the timeline. They've adjusted the algorithm so that you see the most relevant tweets. They're trying to personalize the timeline as well, and we're starting to see them do a little bit more experimentation on the Explore tab. And Jack Dorsey also admitted on the earnings call today that Twitter historically has not done a great job of matching users on Twitter with the interests and topics that they want to follow. So that's going to be a big focus. So those factors are what investors are reacting to, but we'll probably see the share gains pare down over the next several quarters.